Good morning, ladies and gentlemen. I hope you're enjoying your breakfast. And welcome to Cooperative Bank of Kenya, third quarter announcement of results. As usual, before we do anything else, I would like us to start with a word of prayer. And the word of prayer will be led by Rosemary Githaiga. You can hold on taking your breakfast for a while. Welcome, Rosemary.
I hope you don't mind if I request we stand. Let's pray. Our Father and our God, we reverently stand before you and we just want to honor you. We want to thank you for the privilege that you give us to be here. We are in good health and we are alive. It's a gift from you. And we thank you from the very bottom of our hearts. We also thank you that as a CoBank team, you give us an opportunity, Father, not only to announce our results, but also to have an opportunity to take stock and to be able to pick out what you have enabled us to do well, to be able to spur us on the things that we need to do better even in the days to come. And so we thank you, Father. What a privilege it is to cooperate with you in being prosperous, in meeting the aspirations of our shareholders. And so, Lord, even as we start this session, we want to dedicate it to you. We want to pray that you'll be honored, you'll be glorified, and that, Father, we will leave this session inspired. We'll leave this session being sharpened as individuals in fulfilling our respective assignments, and as CoBank, Lord, in fulfilling our mission and vision, even as we know and have affirmed that we are the Kingdom Bank through which you bless this nation. We thank you for each and every person who's made time to be here, Lord. We are truly grateful for them. For we pray this in Jesus' name.
Amen. Thank you, Rosemary. So I think mine is to thank you all for coming. I think if we invited you and you didn't turn up, it won't be good, and therefore I'm thanking you that you're here. Before we start the presentations, just a few announcements to make. As usual, once we are done with the presentations and a few questions and answers, we will have an analysts forum, and I'll be announcing the room where we'll be meeting in a short while as we do the presentations. We will also be doing a conference call on Monday at 4 p.m. We wanted to give the investors enough time to have gone through the figures, so that as we do the conference call on Monday, then you'll be able to ask us questions. We have a Wi-Fi in this room. The password is bank, B-A-N-K, all in lowercase. So you can use the Wi-Fi. So it's my opportunity now to invite our Group Managing Director, Dr. Gideon Muriuki, to do part of the presentation. Thank you. Welcome.
Good morning. Thank you, Patrick. Good to see us this morning. And I'll go straight to the presentation. Just a bit of an update on the microeconomic environment, which you're familiar with. The economy expanded by 6.2% in quarter 2, 2016. We know that most of the sectors actually had a registered positive growth again in second quarter. We saw a bit of government spending that stimulated growth in energy, health, and the general consumption. We had quite a good number of international conferences in the first half year, which was very good for Nairobi particularly. I think what was most exciting was that the improvement in terms of the ease of doing business. We were the third most improved country in the world, and we really commend Wasili and Mohammed, I think, for an excellent job there. And a couple of key reasons for improvements included starting a business enterprise, getting electricity, protection of minority investors, resolving insolvency, trading across borders, and registering property. Overall inflation averaged 6.3% in third quarter 2016 compared to 6.1% third quarter 2015 and 5.36 in second quarter of 2016, arising from food inflation due to the current dry spell that we have had. The exchange rate, the US dollar has generally remained stable at an average of 101 and 30 cents in the third quarter of 2016. And support for the shilling has come from a low import bill and increase in export earnings. And we in our view, we expect that level to be maintained. Yes, interest rates, like we all know, is now capped at CBR plus 4%, and 70% for interest earning accounts in terms of the one thing, and Anton I know will capture that, we saw is quite a surge in particular personal loans after the interest rates were capped. That for us actually we saw particularly the personal loans, the check of loans go up almost 4 times. And I think in 1 month alone we had a growth of over 6 billion as far as loans are concerned. The money market has remained relatively stable in the first 9 months of the year, and also the interbank rate has been fairly within a stable range. I'll take a minute on this slide because I think this speaks a lot about us for many years, and it's a very long story here. From a bank that was in a 2.3 billion loss in year 2001, a bank that had 100,000 account holders in 2001, and we've moved a bank that has moved from 100,000 account holders in 2001 to a bank that has 6.1 million account holders today. A bank that had about 25 branches then in 2001 to a bank that has about 146 branches today. A bank that was largely banking the cooperative movement to where we are now in terms of the numbers that you'll see. And I think the one thing we've done well as a bank is having a successful universal banking model. In that we were a bank banking cooperatives. As you're aware, we are predominantly owned by the Kenyan cooperative movement, and it's a very rich heritage. The Kenyan cooperative movement is the largest in Africa. There has over 15 million Kenyans. Over 50 million Kenyans are members of the Kenyan cooperative movement. It's the largest in Africa. That's a sector that owns 65% of the bank through Coop Holding Cooperative Society. So we have a strategic investor in Coop Holding Cooperative Society that owns 65% of the bank. And so the story of the bank was a bank that was largely banking cooperatives, possibly a decade back, to a bank that then diversified its product offering across board, not only to offer cooperatives, but also to go into retail banking, corporate institutional banking, into subsidiary businesses, regional expansion, and a couple of the associates, as you are aware. If you looked at the 2015 ratings, central bank ratings of banks by central bank, the central bank in their 2015 rating of banks gave Cooperative Bank the second largest market share index. They gave us number 2 positioning as far as the market is concerned. And so there's a big journey for us as an institution from where we were at that small institution, to where we are now. And so we will not be talking about the new businesses we are getting into. And I think I wanted to put that to bed, that we're not going to be talking about new business lines this morning. We'll be talking more about what more are we doing to be a smarter bank in operating in all those market segments. There's no single market segment, there's no single area in terms of banking where we are not, because we are fairly well represented, including now in bank assurance, including owning a strategic 26% interest in CS Insurance Group, like you're aware, started our regional expansion, like you can see. And so we want to take a bit of time this morning, not to speak about the businesses we are in, but to speak more about what is it that we are doing to be a smarter bank in the current environment. We have invested again over time in an innovative customer delivery platforms, e-channels and Copcatch. Maurice will talk about that with our 3 million customers. Digital banking is the way to go. Internet banking, as I said again, 145 branches. Our agency banking model, 576 ATMs. Maurice again will highlight how out of the transformation program that we've gone through, we've been able to transfer about 87% of our transactions now out of our branches to alternative channels. Only 13% of our customers are now coming to our branches. We talked about the 13 million member cooperative movement, the 6.1 million growing direct account holders. That has been a magic number for us. When we started our restructuring program in 2014 with McKinsey, what challenge does is that out of the 6.1 million account holders that we have, then, 72% had only one product with us. And the key challenge was, what is it that we had operated in this sort of product-centric bank, in that we had departments within the bank only selling products. And the key challenge for us was the more we could do in terms of deepening that, in terms of getting those customers to take more products in the bank. Of course, and then I've highlighted there about our link with the cooperative movement, the wholesale banking model. We have issued those debit cards, almost 1 million debit cards now. We also have the almost 600, 560 SACCOs that have front offices. We do the wholesale banking for those SACCOs, those that have front offices. They are banks by their own light. They are out there in the rural areas, so we as a bank, we cannot be. We are supporting them. Those forces have over 4 million Kenyans banking with them. And so we will have the 6 million Kenyans banking directly with us as core bank, and we have another 4 million that are banking with those forces that we support through the wholesale banking model. And of course, we have our various subsidiary companies that are there. And so we want to take our time to think through the Swale Ngigo transformation program that we've been going through. I think I said here before, why last time we were here, is that the ego is reputed to have power of self-renewal, and that's why we settled on the ego. And we started the bold transformation agenda to scale greater frontiers in August 2014. And let me tell you, it was when we met recently, when the issues of the interest rate caps came in this year, and we met with my colleagues, the senior management team of the bank. The very powerful thing that came out of our session is us realizing that we really didn't identify anything out of things that we were not already doing as new things that we needed to deal with. We identified we were right on track right from the process we started in August 2014, and the realignment and the process that we had gone through. We realized we were right on course. It was an issue of doing more of the things that we already identified. And so we want to take a few minutes this morning to share with us the key pillars of this transformation and where we are on it. It's been bold. We started in 2014 with a new structure. We were able to look at a new structure, a more customer-centric structure, which we implemented by December 2014. We released a number of people then, around 160 people. And so we started 2015 on a very high note. January, when we were starting 2015, we started on a high note. And these were the key pillars of it. It was branch transformation and NFI growth. When McKinsey told me in 2014 that it would be possible to cut our time, or a time that our customer would take in our branches, to less than possibly 10 minutes, I said outrightly no. I didn't think it would be possible, Jap. Because we had these long queues, because the 6.1 million customers were good, but they came with queues. If you go to our Cop House branch, our head office branch, it has 120,000 customers. And so queues were starting to develop. But we will have an interesting session with Morris, just telling us what has happened. But today you go to our Cop House branch, to any of our branches for that matter, you'll be shocked to find that half of the branch is actually a sitting area. I don't know where this came from. But half of the branch now is a sitting area. You go to the branch, you pick a number, you sit down, you read your newspaper, you read your material, whatever you're doing, and you go for service. And Maurice will have more time to tell us about that. We'll take time to tell you about sales force effectiveness. This is the heart of what we're doing, and Lydia, Director Corporate and Institutional Banking, will share with us the power of this. The power of saying you have this one customer and being able to do an account plan, and as you visit this customer, then you're able to see how you maximize on the number of products you're selling to this customer. Anthony will share, our Director Credit Management will share about credit management, and we've done extremely well. Our PL ratio, portfolio at risk, NPL loan is just around 4%. It's among the best in the industry, and Anthony will share with us about that. Operational efficiency was a critical area for us. I remember by September 2014, our cost-income ratio was around 60% when we started this. And you'll see the journey we've gone through and the things that we've done. One of the things we did was to create a shared services center that is headed by the Chief Operating Officer, Sam Bilech, my colleague Sam Bilech. And Sam has a couple of things to share this morning on the things that we've gone through in that area. Where we are able then to say we had a cost-income ratio of about 60%, 63% in September 2014, and that has dropped to date, 2 years later, to 47%. We are now at 47%. There's a story there, and Sam will share that. After that then, Evelyn, our Director HR, will come and just share about issues of staff productivity. We've really stretched this quite a bit in terms of all of us having to put our share as far as the performance is concerned, and the way we have really stretched ourselves in terms of key performance indicators and how we are holding each and every one of us accountable on that. And Patrick then will talk about the cost management and the finance numbers. And so I want to stop there, and I want to call William Dumia. William Dumia is one of the one of the lessons we learned from McKinsey when we were doing this. They told us that many institutions get to know what needs to be done, but they never do it. Why? Because after a while, they don't drive those issues. And so one of the critical things we did, our board of directors created a transformation office. And so William Dumia was appointed as a director transformation report, and so he reports to me. And month 3, he comes to the board of management, and quarterly to the board of directors, driving on a full-time basis with his team, driving the transformation agenda. And I think the critical thing for us, and the one thing we have done well, and that's why I want you to hear more of the team that we have, is actually creating this great team in this bank. And I want William to come and get us started and talk about the bigger transformation. Welcome, William. Let's appreciate William as he comes.
Morning, everyone. My name is William Dumia, Director Transformation. I'll just take you through what it is that we are doing as transformation and the agenda that we have for the long term, and some of the things that we are doing short term and medium term. As the Group Managing Director has said, this is an office that was created after the review that we did in August 2014. And its core mandate was to ensure that all the things that we set out to do are actually happening on a day-to-day basis. More from the realization that the other functional directors have a BAU, things that they need to do on a daily basis, and there are things that we need to support, there are things that they need to be supported on to ensure that those goals are achieved on time. So I ran that function, working very closely with all the other divisional heads, to ensure that those things get done. And from the program, we have about 11 items that we are running as an office. The first one is branch transformation, which basically is to ensure that we change the way we run our business in our branches. Before then, we used to have a lot of queues and all that. We had a lot of customers coming in and queuing in the branches. We needed to migrate those customers to other alternative channels so that the few customers that are left, we can be able to sell to them more products. So there are a lot of initiatives. We had over 100 plus initiatives. We've ran about 29 so far that we have successfully implemented in the phase 1, and now we have started the phase 2, and we have another 31 initiatives that we are going to run. It's a continuous process, and we are calling it branch transformation phase 2, and we'll have a phase 3, and we'll continue sharpening whatever it is that will be coming out to even serve our customers better. We have teams that run in those branches. They support the branch management, the regional managers, the divisional director, to ensure that that change takes place, who we call the transformation champions. We also have the corporate sales effectiveness. This cuts across all the relationship management offices in head office. That is the corporate, institutional banking, government banking, cooperatives, where we are reviewing the way we need to be more customer-centric in ensuring that one RM can sell multiple products. He's able to sell multiple channels. He's able to make multiple visits to our clients, have a very comprehensive account plans, automate, free up time on the things that are holding them back so that we give them as much time to be able to sell and visit our customers and have more conversations with our customers. As well as ensuring that we train them and ensure that they are able to sell a multiple bouquet of products. So we have product houses that work together with the segment houses to support that. And that's one of the areas that we've been supporting and ensuring that all those things that they need to upskill themselves on, we are consciously and proactively working on them. The other item is proactive credit management. Our loan book has been growing very fast, and we needed to ensure that we also manage our delinquency book. And we had to come up with various techniques and tactics to ensure that all the loans are paid on time. So we had to come up with various ways of ensuring that we cure better, we proactively manage any arrears, and we have a team that actively resolve those problems and works with the business teams and also the support teams to support that. And we have a team from my area that works with the credit management team. More information will be given by the director credit. Digitization, this is the future of the bank. We still had a lot of processes that were fairly manual. We needed to digitize them. We needed to come up with self-service areas. We needed to enhance some of the things that we are doing end-to-end. All the customer journeys, we needed to work on them. We have various initiatives that we are running, over 20 initiatives that are going to ensure that all the customer journeys are very, very easy. Customers can do it themselves. And even the ones that are within the bank, there's a lot of decision support systems that are supporting those areas, including automation of manual processes that exist. And we have quite a big team there that is working in resolving those issues. And we've seen a lot of gains on that area. Channel enhancements for us to be able to migrate some of these customers to the external channels that we have heavily invested on. We needed to ensure that all the facilitation that they get in the branch is also built on the channels that we have. The mobile banking application, the internet banking, the agency banking, and all those other channels. So there has been a lot of work to ensure that those channels are able to serve the customers where they are not walking into the branches. And also some of the things that they are also able to do on the channels that they requested, we are able to proactively develop. And also ensuring that the systems are always available so that those customers do not stream back to the branch. We also have a key other transformation agenda where we want to be the dominant bank in MSME banking. And we are reviewing the way the product offering through our business bankers in the branches and how we are going to really ensure that MSME becomes a key delivery for the bank. And that's one of the platforms that we are working on. We started this recently. It's now hardly a month. And by next year, early next year, we'll start seeing a lot of activity around that area. Credit process improvement. For us to be able to serve our customers more, we needed to ensure that we improve on the turnaround time, removing non-value adding activities from the frontline staff and making them go to the back office, and the team in the back office ensuring that they are supporting the front office in various paperwork that is required, so that the teams at the front are specifically just dealing with customers and working on, and there is a lot of work stream that is currently running through. For all this to happen, which are the large projects that are fundamentally shifting the way we work as a bank, we had to create certain enablement to support that. And one of the key ones that is currently ongoing is the big data. We realized we have so much information about our customers that were sitting in disparate systems, and we need to bring them together so that we are able to have a 360 view of our customers. And from that 360 view, we can have better conversations with our customers. We can sell to them more products. We are able to target them depending on the clusters and the segments that they are in. And we have an ambitious program that is currently running. We have organized the way we work in terms of the data as a tool of business. We have a better governance structure that we've put in it. We have tools that we are implementing that are also going to give us analytics and business intelligence that is required for the front office teams to be able to work better. The work stream number 9 is performance management. We had to consolidate and come up with top of mind kind of performance programs that each and every individual in a bank needs to know. Initially we would have many. Now each and every of our staff has about 5 to 7 key items that they work on every day, and we had to put that together. And with the help of the big data, we've been able to ensure that all that is numerical. So the data, if you have a certain target, we convert it into your numerical, and the big data is able to click a button, and you're able to know how you're performing on a daily basis. So everybody across the network is able to know how they are performing against their target on a daily basis. The fact that they are few, it is top of mind, so it's easy to remember, it's easy to work on them and also deliver. As part of ensuring that the rhythm continues, the mindset changes, we role model, and we ensure that things are not falling out of the program that we've set for ourselves. We have continuous reviews, which also look at what is happening in the market. And we normally have quarterly discussions where we go offsite with the key team members from various business units to be able to review what is happening and what we need to do and infuse to improve on the things that we continue doing. Lastly, the transformation office is led by myself. I have a big team of project managers who run in each of these pillars, and we also have what we call the transformation champions who are able to collect all the data that is required for us to make decisions. We liaise with other sponsors and consultants, maybe McKinsey when we need some of them, IFC and all the other teams that come to facilitate us. We monitor on a daily basis. We track all the initiatives and the milestones that we've put in place. We sequence them. We ensure that we give resources and support the resourcing that is required where necessary, coach, role model, and also ensure that we communicate the progress and the early successes on a monthly basis to all the staff. We also assist the teams in quick approvals where it's required so that the project doesn't stall. And on a daily basis, each and every unit, every day, they're able to have a performance conversation talking about the things that they needed to do yesterday, why they did not meet them, and what they need to do today so that they are able to meet those gaps. And the same is repeated weekly, monthly, and quarterly. And we have also set up a problem-solving session, which is bottom-up. All the problems that are being experienced by the teams, they're able to discuss them and come up with their own solutions that we support and are able to progress. So holistically, it's been working well. It's been a very exciting journey, and we're very proud of the results that we are getting out of it. And we are continuing to push on and continue to get the successes that we are getting. Thank you very much. At this point, I would want to invite my colleague, Director Retail and Business Banking, Maurice Matumo, to come and take us through the branch transformation piece. Let's appreciate Maurice.
Good morning. My name is Maurice Matumo. I'm the director in charge of retail and business banking. This is the whole area around our branches, our retail enterprise. And I'll speak to some of the things that our GMD highlighted in terms of the progress we've made so far, some of the things we are celebrating, even as we share with you the successes. Now, our branch transformation journey has taken 3 broad phases. I think the first one started in 2014, right after the soaring eagle agenda started, and with broad themes. I think the first theme that we had was around really reducing the wait times in our branches, and also giving our customers convenient channels through which they would access our services. In 2016, we've embarked on a second phase of that, and I'll also speak to it in terms of some of the areas that we are focusing on. And I think it's more around driving our sales force excellence and improving the customer experience, having gotten quite some successes from the first phase. And then phase 3, which will be starting in 2017 and beyond. Now, just to speak to what has happened in the last year and a bit in terms of the branch transformation is the issue around how we've organized our branches. And I think one of the key feedbacks that we're getting from our clients is how we've radically improved our in-branch experience. And I think the graphic there that you see on the screen speaks to our customers being served in a comfortable environment where we are now sitting them as they wait for service. They pick a ticket. I think this was alluded to earlier. They sit down, they wait to be called. And what is more fundamental is what this has done in terms of what our customers are telling us. In some of the surveys that we have taken in the last few months, our customers are saying they want to come to our branches and spend time to learn more about other services that we can offer. And so this has really been profound for the bank. In terms of what this has meant for the bank is that we've been able not only to release productivity, because when we started this journey in 2014, 45% of our staff were involved in frontline activities, that is actually serving the customers. Last year, with the initiatives that we undertook, that shifted to 55%. This year, and the year is yet to come to a close, we've seen that shift already to 63%, which means a lot more productivity is being released, but more importantly is the impact this is creating in terms of customer experience. And this has been anchored by the self-service also kiosks that we've created within our branches. Today, if you walk into our branches, you will find self-service zones. The first thing you see when you walk in is a self-service zone where you either get a drop box or you can drop your cash. That takes you a record 1 minute, just to drop your cash if you're coming to make a deposit. You have the option of using ATMs. We're now housing some of our ATMs inside the banking halls just to encourage our customers to use alternative channels. We have toll-free lines for service. So if you have got a basic query, you need not speak to, go to the bank, a position or wait. You just pick a phone. And even we have a number which you can call remotely, and you're able to get a lot of service queries sorted out. In addition, of course, to the more digital platforms, which are really the future of the bank in terms of internet banking or mobile banking. And overall, what we've seen is the shift of our customers to these very convenient channels. And I think real testimony of this has been our wait time. I think when we started this journey, our soaring eagle agenda, our queue times average between for the continuation of the first phase. And what are these initiatives? Maybe if I could just speak to them. The key initiatives that we are driving under the second wave of the transformation in the branch network is around cross-selling and upscaling. Previously, our group managing director has spoken about the huge potential in terms of the 6.1 million customers, 71% of whom have got only one account. So the big initiative is around adding, selling additional products to these clients. We have the base, we have 6.1 million customers. So what we are challenging ourselves is to say, how can we add additional solutions with the universal banking model that we're in? How can we do that, particularly now with a bias on NFIs? We also have very specific initiatives around freeing up time. 63% of our staff are now frontline, but we still believe there's lots more we can do to free up this productivity and increase our overall performance. And so we are also challenging ourselves around what processes must we put in place? How can we make the customer journey easier? How can we increase our efficiencies, leveraging on technology? In addition, we're looking at process improvements around the Salesforce excellence. How can we even better think about our NPLs and how we can structure that discussion? Of course, the whole topic about performance, rhythms, performance discussions is topical, particularly for the retail enterprise, to make sure that we continue. So those are the broad themes that we're challenging ourselves as we move into the next phase. I now want just to speak to some of the key results that we've seen, based on the initiatives that I've shared. And I think I just want to touch on two broad areas around transaction incomes, as well as the usage of alternative channels. This is the whole digital banking space. And I think this is what we've seen in terms of, for example, our mobile platform. 20% growth in registered MCOP Cash customers year on year. And out of these, we've seen 75% growth in MCOP Cash transactions. You look at the agency banking area, which is our COP Kwajirani, we see 115% growth in agent transactions. You look at internet banking, the uptake has been tremendous, 787% growth in terms of internet banking transactions. And even when you look deeper in terms of what our customers doing with these channels, you begin to see 130% growth in MCOP Cash loans applications coming through the phone. And also, that also ties up with the revenue at 68% on our mobile platform and 90% on our agency banking. Now, this is testimony that actually a lot of the work we've done on moving customers to alternative channels is bearing fruit. Like I said, not just in improving the efficiencies and in releasing productivity of our frontline teams, but more importantly, in actually serving our customers right. An exciting area for us is around the mobile. Mobile really does speak to the retail enterprise in terms of our innovative platform, MCOP Cash, which is cross-telco, offers all products. And I think what we are trying to demonstrate here through this graphic is just to demonstrate the various services that you can access and how versatile it is. We recently revamped our mobile banking platform. We have one of the sleekest, suavest, I think the generation that follows, I guess my generation will say is really cool. And I think offers a wide range of services, right from, you can borrow, you can transact, you can play, you can pay bills, you can practically do everything financial. In fact, everything you can do in the branch, you can actually do on a mobile platform. And the way we've done it is, and there's more work that we'll continue to do in this space to make sure that we continue to especially attract the more youthful customers who are the vast majority of our population as a country. This will be a big area, and I think we've just highlighted just some of the things we can do, which is everything that anybody would require from a bank. I think finally, I just want to just finish with this slide and speak to, it sort of summarizes what we're talking about in terms of the channel transformation, in terms of the branches, as well as NFI growth. Our branch banking, what have we seen? We've seen a reduction in transactions. And that
the items to have free time to call on more clients and convert more. And of course, this we have been doing because we have the briefings, so we do it all the time. The briefings, the rehearsal, morning huddles, weekly steer calls, and reviews, and the weekly problem-solving sessions are happening on a weekly basis. One of the milestones on the forecast on SAP has been the comprehensive and collaborative account planning process, which has resulted in growth. In quarter one, we saw a growth of 8%. That was scaled up in quarter two to 33%. As we speak, we talk about 42%, and this quarter we are almost nearly the 50%, which was the target. So of course, we are vastly the same in terms of the target there. There are more client acquisition because there is more clarity in the way we are selling. There's increased product holding per customer, increased client holding by Adam, and product holding planning and cross-selling, enhanced collaboration. People are happy to work with their teams. There's a lot of focus on NFI, and there are some emerging stars like Patrick Enhance in our business. There's been enhanced RM competency across various product services because there's a lot of joint business collaboration with the the product houses, experts in the product with the product partners. So in conclusion, the achievements that we have seen as business in the past 2 years is there's been a lot of growth in corporate institutional banking. So far we talk about the book of 96 billion in assets as the business of corporate institutional banking. The business has contributed over 1.4 billion in terms of foreign and transactional business. NFI streams currently constitute 31% of our total revenue base, and we continue to focus more on NFI, and some of the key products that we want to really touch on is trade finance. It's been a very key product that we want to drive. We've seen a lot of opacity coming from there, given the focus we've given it, and we have an aggressive customer acquisition, which is instrumental in growing this revenue line, especially in light of the loss of interest income. So that's 1%. We want to scale that up to the region of over 41 or over 40%. Secondly, there is a lot of potential for us in foreign exchange income space. So we have engaged an aggressive sales drive and calling program to increase our market share in this area. I want to thank you very much for attention. Thank you. I call upon Sabiraj, just take us to the next piece. Thank you very much.
Good morning. Now, my two colleagues represent the front part of our business where they interact with clients to do the sales and service. My role at the back as COO is to ensure that we facilitate them with the platforms, with the processes and systems that ensure that delivery is excellent. And so we've consolidated all frontline roles that were embedded in the front lines and pulled them to the back so that we are able to offer efficiency and release these people in the front to do more sales. To do that, we've also had to ramp up our skill sets, and in the year that has gone by or is going to come to an end, we've focused on deepening our skills around data management. We have a CIO with a whole team of technology people, but also we realize that data is an asset. And for us to be able to work on this asset in a more diligent way to inform our decisions, we've gone out to look for requisite skills. And so we've had, brought in somebody to help us with data strategy and governance. We've brought in a data architect. We've also had enterprise architect, governance lead, data engineer, and all. This is all in preparation to make sure that we, churn out information that is useful from the current data that we hold. What's our strength as we support the bank from the end or from the back end? Significant investments in our systems and platforms, and so we are proud to say we have a very robust core banking system as well as other infrastructural systems or business systems that can afford actually expansion of our customer holding to 20 million. So even as we talk of 6 million, we still have significant headroom, and this is fairly new because we rolled it out in 2013. We have top tier data center with high capability IBM servers. We've enhanced our information security that is critical now as we expand our business. We are rapidly executing our projects just to make sure that the benefits are realized very quickly, and significant investments in other systems, like now we are rolling out the ERP, customer relationship system, trade finance, and also treasury. So we have a very robust call center as well. Some of the things that we are doing to make sure that the front line is supported is to make sure that our systems are available. The one thing that the people in the front, when they are dealing or selling to their customers, and even our customers, is to ensure that when they want to link with us, we are available. And we are proud to say that we are achieving 99.5% uptime on our core banking system and other business systems. That is so fundamental that each day there is confidence in our channels, as my colleagues have just talked about. In addition to that, we've robustly grown our integrations, business-to-business integrations, so that when Maurice and team and Lydia and team go out, our systems and their client systems are able to talk together for better efficiency. And so we've rolled out significant connectivities and integrations to our customers to ensure that the linkages are perfect and that transactions are straight through. We've implemented 28 institutions to our channels by way of integration. 11 are currently under implementation. And what this means, for instance, is that we are talking about enhanced business volume from these clients. Take, for example, a university where school fees is integrated. Reconciliation issues, particularly when you are talking of mass small volume deposits to the client, it's very easy. No need to come for statements and asking querying entries in their books. It also affords us good collection channels and distinctive customer experience and supports business for optimally priced and stable deposits. It means with those connections and convenience that it brings, it makes Lydia and Maurice have an easier time talking to our customers for more business. On the area of channel enhancement, significant work has been done here to give the kind of comfort that my colleagues have talked about. We have a robust new MCOP cash application deployed with better reviews and reception from our customers, enhanced functionalities and services on that platform. We're able to do e-channel, e-loops. Our mass market now is onboarding onto this channel because it's convenient, and this helps us to serve our customers easily and cheaply. Enhanced agency and merchant POS, applications that can, the agency banking model has really helped us to drive our customers out of the banking halls, but at the same time giving convenience to those customers given the proximity of those locations. Enhanced internet application as well, and as well as the IVR functionality, system at our call center. In terms of enterprise systems, our support is to ensure that we have, enhanced systems that support our colleagues in trade finance, treasury system, we call it OPIX. We have IT service management, which tells us which system is performing at what level, what is the availability, what is the use of storage capacity and server utilization, so that we are able to intervene before any outage occurs. We have the call center platforms, which are very key in terms of our interaction with our customers, which is 24/7, and that ensures availability to answer any queries at any one time. And we have the CRM also, and building onto our 360 view of the customer. This enterprise and solution architecture is enabling us to, meet customer requirements in a very broad way. The integrations of these systems that we are talking about with our clients and the various business systems go into our core banking system through one bridge, as it were, so that we don't have multiple connections, what we are calling the service-oriented architecture. And that enables ease of connection, ease of scalability, and therefore ease also of support, hence the high availability that we saw up there. In terms of customer experience and relationship management, we have dynamic customer strategy software that have been deployed and helps our people. There's a whole team that actually works at call center to both receive and also make outbound calls. Now, one of the things that the GMB mentioned earlier in the morning was the issue of data and analytics, because there is so much data resident in our records that we hitherto not perhaps optimized, and so we've turned to that area to be able to invest significantly and ensure that we have policies and we understand that data to be able to help us make fact-based decisions away from hunch-based decisions. So it will enhance our precision, and it will ensure that we are able to serve our customers a lot more precisely. So that some of the things we are doing there, for instance, is predictive analysis. We will go into a customer, collect all his or her data, and using the algorithms, we are able to know the probability of you buying a certain product is much higher than two other products. And so our people will come to you with those targeted products where success rate is likely to be high. We, as part of supporting that analytics, also created an innovation hub, because clearly the way of the future is innovation, is digital, and so we have a hub there that works to make sure that it scans the environment, what is new, what is cutting edge, and what can we import into our institution to be able to put us at the front and be more competitive. The critical issue also around information security. Data is a key asset for us, and so we have ensured to make sure that our firewalls are strengthened, and checks and controls of who accesses what system, and the default or audit trails are there to make sure that we are in control of data, access, and use. Okay? And so that's how we support the frontline, and we continue to make sure that the platforms that we created are available all the time and are robustly improved at any one time. At this point, I want to invite my colleague from Credit Management, Anthony Bo.
Morning, everybody. I think we've heard about the front office side of our business in terms of how sales goes on, and from there we also heard about the operational side, the technical bit. I want to talk a little bit about how our loan book has developed. And so let me say that we have a 227 billion shillings loan book. We've had proactive management of this book, and there are two key themes that we've carried as we do this proactive management of the book. One is the theme around efficiency. As you're aware, with the change in the law in terms of the capping of interest rates, this is going to continue to be very important. And we thank God, because we had already begun the journey of creating efficiency as far as our processes are concerned, such that then now this continues into the new environment and sort of ties in very well with what is going on. So you'll notice that so that element of efficiency continues. The second theme around proactive management is on the issue of quality. So we've been able to continue with what we had started in proactively managing the quality of the loan book, starting obviously at origination and moving on into monitoring and finally into remedial. So when you see that 227 billion shilling loan book, I think the GMD described very well the universal model that we have in terms of the segments that we are talking about. So we've been able to diversify our loan book with very good distribution across retail. This is consumer loans, good distribution, and consumer loans largely focused on checkoff, which is salary-based and to a large extent being deducted at source through very stable employers. We've been able to diversify into business banking, which is the micro and SME loans. And here we're talking about all sectors of the economy. And through focus in terms of the economic sectors that we are looking at, we've been able to diversify between whether it is trade, manufacturing, the service elements, and those other sectors that are growing in our economy. And we're able to focus in terms of where we invest our loans. The other element around this whole area of diversification is in terms of the products. Across the board, we're able to offer working capital facilities, asset finance, mortgage finance, and be able to diversify both in terms of the returns that we make and also in terms of the quality of those loans, so that we are then not dependent or concentrated in one area, such that when one sector has an issue, we are able to make money off another sector, or if a sector is not growing, we're able to grow in a different sector. So proactive management, through efficiency and quality. Now, in terms of the efficiency side, I think we've talked before about the work we did about reducing the turnaround time, reducing the amount of work that is done in the front office, so that a lot of work is then done in the back office and there's a lot more efficiency in the process. We've moved away from, or beginning to move away from, more of the judgment-based lending to formula-based lending. And through what our Sam has talked about, using data, we are able to predict and be able to use our data to focus our attention in terms of whom to lend money to. Those who are paying, we're able to lend them more, and those who have a challenge, we're able to work with them to find solutions for some of the problems that they're facing. And so moving on into the details of what we've been able to achieve, on the frontline support, we've been able to offer a lot of support to the frontline around what sectors should they go for, what are the customers that they should focus attention on. And the key milestones there is that we've been able to have sustained collaboration between those who are meeting the customers on a day-to-day basis and the back office to give them data to be able to know exactly what product should you sell, which is giving you better profitability, and where are the risks lower. We've also been able to collaborate and establish regular touch points and provision of advisory services to the front office. This is also in terms of working with the customers when they have a problem. You'll see statistics there around the issue of the 1 to 89 days. Customers have delay in payment. That is what we talk about, the 1 to 89 days. And we've been able to reduce those delays from an average of about, where maybe about 20 billion shillings of our book used to have delays in payment, down to about 10 billion shillings of our book having delayed in payment. And that's why we're saying that 59% improvement during the course of this year, since Q1 up to now, where we are in terms of Q3. Obviously, you know what that means. That means reduced provisions, means greater efficiency. We're spending more time selling and less time dealing with remedial work. We've also been able to enhance the systems and processes and tooling. A lot more of what we're doing is now on e-credit or e-channels. And we've seen it in terms of what Director Retail, Morris, talked about. We've been able to push quite a bit of our retail lending onto the mobile platform. That creates efficiency, that creates better quality, and we are going to revamp that to take it to another level. Many people talk about lending to the retail sector through the mobile channel. We're able to lend to the business sector through the mobile channel, and very shortly we'll be able to do that on a mass market basis. In terms of collections and curing of loans, we've been able to onboard most of our loans now onto an e-collection channel, such that from the minute somebody has even the slightest signs of having a problem with repaying their loans, we're able to have early management or early warning on this. We've been able to, through the predictive analysis, identify those customers who are likely to have a problem and begin to have conversations with them even before the problems manifest. Through turnovers and through other means, we're able to tell a person who's going to start having an issue even before he defaults. And through that, we've been able to then have those conversations early and cure and begin to work on solutions much earlier than before. The other thing we're also able to do is, I know this is just more of an enhancement on what we're able to do through CRB or credit referencing. We have our own internal way of being able to identify customers who have an issue earlier and begin to work on them and in a much earlier way. I know the word is more about efficient blacklisting, but it's not really blacklisting because it gives us an opportunity to work with this customer and identify where we can be able to give him solutions much earlier. And through that, we've been able to have an aggressive remedial action and follow-up plan. The impact of that is a much lower NPL. You'll notice that our NPL is standard at about 4%. And through that, we've been able to benefit in terms of lower provisions and a more sustainable loan book. I think I want to just say one more last thing about the loan volumes. Following the reduction of interest rates to about 14.5% initially and now to 14%, we were one of the first banks to accept that the cheese has moved. And through that, and also because of the work that we had done earlier on in the creating much more efficient processes. There are three things that we look at in terms of when you're lending, in terms of the pricing structure. You look at your cost of funds, you look at your operational costs, and then you also look at your cost of risk. Through all this, we've been able to work on our operational efficiency, and we've also been able to work on our cost of risk. So when this move came, we're able to sort of embrace it very early. The impact of that initially was that from where we used to process about 350 loans a day, that number moved to about 1,250 loans a day. We had to revamp and increase our efficiency in terms of the back office. We had to increase staff, but our processes were already able to absorb quite a bit of that volume, maybe about to about 600 of those applications, and we just had to increase capacity by only about 20% to achieve the full whatever. And the impact of that in the numbers that you will see is not fully seen, but when you talk about where we are headed, we've seen an increase in the number of customers. That also then talks to them working with us on other products, because we've got the cross-selling model, so we're not only looking at the lending side. We've also seen that in terms of the volume of loans has gone up. I think the MD mentioned it. We've seen our loan book increase by almost about, let's say about 7.5 to almost 8 billion shillings in 1 month. And so we've seen a growth in volume, both in terms of number of customers and in value. And so we're seeing the benefit of the transformation journey that we've taken. The very many things that we've done earlier on have helped us, and even what we are continuing to do to enhance that proactive management of credit is taking us to the next level. And so that is where we are headed, and we believe that with that we should see an even better position into the coming year, months and into the coming year. So with that, I want to stop there and invite Director HR, Evelyn Munyoki, to come forward.
Good morning, everyone. As I stand here just to take you through the staff productivity presentation, I'm so proud to be part of this cooperative bank. And as I speak through this, you will see why it's evident that is something that is a strong pillar for us, and we'll be speaking to the numbers that you will see a little later on. In terms of where we're operating, currently we operate in a talent economy. What that means is that you're able then to have your people, the right people, to actually give you the capability to execute your strategy and to you. And especially for us, where we've had to go through transformation, we've seen that getting the right people on board, having the right team, is actually gotten us some amazing results this year. If I speak to that a little bit more, you will find that we operate in a VUCA environment, which means it's quite volatile, uncertain, it's about complexity, and it's also quite ambiguous. So a lot of times you're having to move without full information, but then your ability to be able to be very clear about what it is that you want to achieve has really driven us in the areas that we'll be speaking about. Let me give you a bit of a profile about this, the things you'll be seeing here, and the group of people that you'll be relating this data to. We have a very interesting profile of our bank. 81% of our staff are actually millennials. If you look at the millennials description, you'll find that this is actually anyone who's below 35 years of age. 92% of our staff still remain to be under 40, which means we are still a very agile, very energetic group. Now, 65% of the same staff you will find are actually below 30. That changes the dynamics of how we manage our people, and it changes the way we actually go forward, even addressing the things that are happening in the market, but also addressing our own customer experience in all our distribution system. On performance management, here, as a bank, we have focused on staff productivity as a key thing to drive all the things that we're doing around the people agenda. And on performance management, as has been mentioned before by my colleagues, you'll find that we have a KPI-focused performance management system that actually has a lot of rigor to it. And here you'll find that 95% will be engaging with it constantly, there's a lot of data around the data analytics and the business intelligence that actually helps build even more credibility around this performance management process and systems and the rigor that we have put around it. So we have a lot of performance dialogues across the network, people getting a sense of how they're doing on a daily basis. In terms of turnaround, as with change, you will find that there will be people who might actually struggle with some of the changes that we're going through, and we put in support systems to make sure that we actually help them turn around their performance. And that has been an amazing experience where we have 96% of those people who are on any form of performance support or performance improvement have actually turned their performance around in the period that we're speaking about. In terms of embedded coaching and feedback, this is one of the things that is driving organizations that are getting to really outperform their peers in the market. And you will find that as a bank, we have not been left behind. We are embedding coaching across the bank. And with the population, with the millennials, you have to get this piece right. If you're going to go further, this is the one piece, the feedback and the coaching piece have to be in place. And at the moment in the bank, we have over 200 leaders, team leaders actually coaching their teams and making sure that actually this is a continuous conversation about how we get to where we are going. In terms of the high-performing teams, we are embedding a culture around the HPT culture, which means that we have a sense to get a hunger to win, but also to get people doing all the right things around high performance. And you'll see here that there's a lot of manager enablement going on in the bank to drive the high-performing teams, and also to build people manager capabilities. If you have 81% of your staff as millennials, you will also find that a number of those will also be team leaders. And so we are giving them the capabilities to be able to actually lead their teams and lead their teams so that we can actually execute on the corporate strategy that we have, as well as the transformation agenda. The coaching capability, and this is something that is a theme that is going across our productivity agenda. You'll find even at senior leadership level, at director level, we have about 60% of our directors are actually now have coaching certification, are doing a lot of coaching as well. And also a number of our senior leaders, we have over 20 now certified productivity coaches across the organization. Around performance-linked rewards, as with any organization, you want to make sure that you keep your staff engaged, and to also see the bigger picture around what is the need for them, even as they drive such an ambitious goal, as they drive such an ambitious transformation program. And here we put in a differentiated reward structure, which is performance-linked, and we've seen that we are continuing to reward exceptional performance and really create differentiation around how we reward people. The other thing is that we are putting in place, and we have a number of incentive plans around some of the front office teams, and that is a continuing theme into the period in the next months to come, where we want to make sure that this actually drives performance around sales and target-based productivity. The other theme around staff productivity is really getting the best out of our people, and also the structures that we put in place to make sure there's coherence around our structure and our strategy and the key things that we're driving as an organization. We continue to do structural alignments and making sure that we can get some realignment, especially for functions, our key functions. For example, our agency banking is one of our key areas, our bank assurance is another big key area, our trade finance. And as you heard from my colleagues, trade finance is one of the areas that's going to really drive a lot of the NFI component. What we have seen is an approximate 21% increase in productivity just by doing the structural alignments. And this is releasing a lot of productivity back into the system to make sure that we can actually achieve the goals that we have. In terms of staff optimization, again, this is something that's continuing. My colleague mentioned that we have 63% of our staff, especially in the retail, having moved into sales, into the front line, and that means actually there's quite a lot of time freed up for people to actually do more sales. As we go into the next period, we are looking to see how we'll even get the branches to be sales hubs for us and actually move more people to the front line, and the rest actually, as the CEO mentioned, goes back into the shared services space. What we have seen is also we are using a lot more data. Data has become a critical asset for us. So we resource around data. So everything that we are doing around resourcing is based on data-driven staffing. On the leadership in action and mentoring, this is one area that we've actually seen a lot of gains, where we are having a lot of our branch leaders, for example, getting onto new roles and helping them settle on the roles much faster. We've actually implemented induction and mentoring programs, and this has been quite successful in getting people to be quite productive within 3 months of you getting onto the role, then you're able to get to 100% productivity. On talent acquisition, a very big piece for us, as the CEO mentioned, we've actually done a lot in his area around the data organization, data analytics space. We've also brought in a lot more specialist internal strategic capabilities in data analytics, in ICT, specialized skills in CRM, and this actually speaks to the focus of the transformation program and making sure we have the right people to actually drive all the key initiatives and the pillars of where we're going. Talent engagement, this is one of the things that we speak to, because amongst our peers in the financial services, we are now the top talent. We have the top talent engagement index, and that moved from 4% last year to now 27%, and that's actually a big move. This is just around how we have focused our EVP, our employer value proposition, and also making sure that our talent internally is starting to speak to the things that we are actually doing within the organization. And without paying too much of a premium, we are able to get good talent into the organization. And people are engaging with us to just be part of the exciting journey we have as a bank. Onboarding is another big piece for us. It speaks to how do you get the lowest or the shortest time to productivity. We've managed to move that from 6 to 9 months, and that means now we have a time to productivity of 3 months. So new hires coming into the organization within 3 months are able to get to full productivity, and we are getting a lot of feedback around who are joining us. Remember that we've had a big number, quite a significant number of people who have specialist skills join us, and they've actually settled and gotten to a place of full productivity, and the results will show. As part of our skills for the future, we don't forget that we're also building talent pipelines. We did get in over 100 graduate hires this year, and so we've seen something quite amazing here, because we're not necessarily hiring graduate hires. We're actually hiring for our talent benches, managers, team leaders, relationship managers, our key leadership teams in the next few years to come. Now, because we are millennial focused also organization in terms of our profile, this is also going into that agenda as we go into the future. On workforce stabilization, again, this is about agility in a VUCA environment, where we're having to master the complexity in the environment. And we've seen that one of the things that we've had to do is to really stabilize our workforce. Even when the cheese has moved, we've managed to make sure that we are focusing them on the key things we need to do, and also continue to address the question that they have, what's in it for me? And here we have the launch of the corporate wellness program. This is to drive employee engagement, productivity, and also as part of our cost containment initiatives. We've stabilized the sales force and the support workforce by making sure we've strengthened our employer value proposition, but we're doing a lot of proactive retention. Currently, our retention is at 93%. And that means we have taken a lot of steps to ring-fence our critical talent as we do the cutting-edge things that we are doing as a bank. And we have a much lower turnover around our top contributor. This is much less than 1.1%. And we've seen that retaining our key talent is also key to our strategy execution. Thank you so much. And now I'd like to call my colleague, Patrick Nyaga, to give us the next piece of the presentation.
Thank you, Evelyn. Let's appreciate Evelyn again. I think it wouldn't be good to conclude the transformation story without looking at some of the key parameters that have been impacted very positively, and probably looking at our cost-to-income ratio, having moved from a high of 59% in 2014, and this is sort of correlating, starting from the time we did the transformation journey, to a cost-to-income ratio of 47.1%. I think a retail enterprise with all these branches and heavy cost processes, moving 12% down to a cost-income ratio is very good. And I think what we are saying is we are not stopping here. There is still a lot more that we want to do to make sure that we focus on the cost-income ratio. And really our target is to drive that cost-income ratio going forward to about 45%. What are some of the things we have done and we will continue doing to make sure that our cost-to-income ratio and generally our cost management and efficiency is achieved? One of the key initiatives we are doing right now is the implementation of enterprise resource planning. And this is a big project, but we focused probably on two key areas right now. And this is mainly the accounts payable procure-to-pay process. And what are we looking at doing here? Probably the key achievement here will be better visibility and decision making. And especially if you think about having 145 branches and having to spend at each and every one of those points, including probably about 60 head office departments, then you note that trying to manage this a bit without a system is a bit difficult. And therefore, very clear visibility and decision making in terms of incurring costs is what we are going to be getting from the enterprise resource planning. And this will talk even to things like, for example, what are some of the limits that you create into those branches? When people spend, do you see from a central position, and therefore you're able to guide those decisions? So that is a very key implementation. We are in the process of doing it. The other key thing that we have done, and I think my colleagues have really talked about them, is focus on electronic delivery channels. And what you will see is that we've really reduced implementation of brick and mortar. There will be a few implementation or a few new branches here and there, but really not the big kind of implementation that we've been doing before. And what has also helped us there is that as we focus more people in the branches then into the sales areas, then there is a cost element there that we are foregoing. Also the fact that going to the electronic delivery channels, they are much more cheaper, much more convenient, less expensive. For example, you will see today that rents are very high because of the property prices of buildings. So by moving into electronic channels, then we really are cost managing. We are looking at automation of some various key processes. I think the CEO has mentioned quite a number of those. Even with achieving the 47.8%, there's still a number of areas that we're focusing on there. For example, moving paper from the various branches into the central operations area. We're in the process of automating that. We are looking at continuous review of our cost lines for adoption of better and cheaper methods. For example, I think you're all aware of Uber. It's sort of reduced costs significantly. As a bank with 145 branches and heavy corporate business, we have a lot of use for taxes, for example. So just making sure that we move from the high expensive methods to cheaper methods, just one of the examples. Appointment and approvals of evaluation committee for all sourcing. I think this has been a very critical area. We've seen an improvement of almost 4 to 500 million shillings reduction just out of sourcing properly. And this has a combination of other things like, for example, making sure that every 6 months you go out to the market, you check who is new in terms of supply. This market is very dynamic. Every now and then new suppliers are coming up and they are cheaper. So by us going out there and making sure that we will qualify more suppliers for each and everything that we do, we are getting a lot of benefit from that. We are also doing a lot of market pricing. I'm sure if you go to Nakumatt and you buy water, it will be maybe 50 shillings, but if you order it through an LPO, it will probably be 100 shillings. Now, and I think you've also seen in the market some of those areas where costs are just escalated. But if you go to the market and try to make sure that you align yourself when you're buying with the market prices, then there's a lot of cost saving there. We are looking at enhanced control committees. The evaluation committee, for example, every of our procurement has to go through an evaluation committee, no matter how small it is. And because having done it over time, we've seen a lot of savings. We have also enhanced our expenditure management committee. These are the people that sit to just make sure that all the procurement that is happening in the bank is competitive. There is a need for that which we are procuring, and out of that we've seen a lot of savings. So basically, those are some of the key areas here we're looking at, and I think we will continue the journey of transformation into our cost management, and we are excited to say that probably we are looking at a 45% cost-to-income ratio, and that means then an improvement to our bottom line. In terms of some of the things we are doing, I think our Director of Credit Management has really talked about growing our loan book now, especially with the interest rate cap. So we continue leveraging on our development partners. I think we've shared this with you before, but key to note that some of these loans are at a very, very reasonable rate, and therefore they help us in terms of mitigating our shilling exposure. We have a number of customers now that are borrowing in foreign currency, and therefore those loans are helping us expand our client base, especially on the forex-rich sectors. These loans have helped us also boost our competitive position on affordable lending rates. I mentioned that, and I think to mention that lately we have the latest loan that we've taken is the IFC US dollar 105 billion. That's about 10.7 billion, which is a 7-year, and this is really focused on SMEs, construction and mortgage segments. I think our Director Retail also mentioned that transformation. We also now have a piece which we are trading with IFC, and this is really meant to make sure that the micro and SMEs business is very entrenched in our bank. So basically, we will continue on need basis to attract some of this funding whenever we need. The bank has, in the recent past, and of course, out of the many things that we have done in terms of even transformation, gotten a few awards. We have the Catalyst Awards there, 2016, and these were given by the Kenya Bankers Association. And the bank was a proud winner of second overall position, and also second position in terms of best practice in sustainable financing. I think if you look at the trends today, there will be a lot of focus on sustainable financing. We also were able to get first position in terms of commercial client case study, and this was Strathmore University solar energy project. We financed that, and it was very, very successful. Also, probably to say that when the AFD gave this line, we were able to exhaust our portion, and we even went into picking from those other banks that had not disbursed it. We were also given first position in terms of micro SME case study, Baromatech Enterprises, and we continue doing quite a lot in MSME. In terms of Bankers Africa Awards, again in 2016, the World Finance Awards, we were awarded the best commercial bank in Kenya. Banker is a reputable organization in the UK. Therefore, again, we are proud to be winners of these awards. Bank Africa, East Africa Awards 2016, we were added Best Socially Responsible Bank in East Africa. I guess this is mainly because of our collaboration with the SACCOs and the cooperatives. And also Bank Africa, East Africa 2016 Awards, we were awarded the Best Retail Bank in Kenya. Our Group Managing Director was also awarded the Grand Award to Mishibora 2016. This is an award that is given by Mishibora Awards 2016 and mainly by the Kenya Christian Professional Forum, and this is mainly the Catholic Church, and also participation of all the other churches, including the ACK, who actually give the award. So I think basically what we're saying, even as we do other things, even as we increase the numbers, the bank is being recognized for many other things that it's doing. I think I'll stop there, and I'll invite the Group Managing Director to come and conclude the presentation. Thank you very much.
Please appreciate my colleagues again. We don't get a chance to meet you this way even that often, and so thank you for your time, for just taking time to hear the story, because we could have sent you the numbers directly, which I'm just about to do, but you would not have had that story. Get from the people who are driving it. I think the one thing we've done well is the team that we put together in cooperative. I hope sitting there you're able to appreciate that over time, as Zillian was saying, our biggest investment is actually in our people. It's a young team, it's a young energetic team, and we really thank God for that. I think I don't need to repeat this. In terms of the games we've done, Maurice talks about the 9 minutes now we're taking in our branches from another 45 minutes, 85% of our transactions through alternative channels. The front office, back office staff now ratio of about 63%, cost income ratio of 47% from a high of 58% in 2014. Incredible reduction, over 10%. Anthony explained why our NPL is still at 4.1%. I mean, there's been a massive investment in our NPLs. In terms of what we are doing to manage the 1 to 89, and Vicky gave all the statistics on that. So if you see our book still at the same level, then you understand why. And I'm sure you'll interact more with Anthony, the analyst, in the analyst briefing session after this. What he's doing in 1 to 89 days, and what he's doing in terms of the collection, and also in terms of the optimal resourcing, and I think Evelyn alluded to that in terms of over 20% improvement in our staff productivity. If you are lazy, you cannot be in the bank today. I mean, it's incredible in terms of it's a daily process. I think it's William who said you're able to see your daily performance, and we have and Lady alluded to it that every morning the departmental heads have morning huddle meetings, and they're able to review the things they did the previous day, the successes of that week, and what they want to do that new week. We can go on. Just to very quickly, I think you know about our CSR. The key thing we have invested in is the capacity building in the cooperative movement through consultancy. We have over 12 consultants who are on a full-time basis through Nicholas Kamonye doing an excellent job out in the cooperative movement. This is very important for us because this is the sector that owns the bank. So we have invested a lot in terms of giving back to that sector. You are aware about our school fees program. And the Cobank Foundation. We have a lot of work we're doing in terms of farmers. KCC and Mrs. Mumbai is here in terms of support to coffee farmers to do more of value addition in that area. To date, we've supported over 4,200 students, both at the secondary and university level. And we have other various initiatives, like you can see on the last column, in terms of I think we've donated about 3 clinics so far in total to the First Lady Beyond Zero campaign. That's about 60 million. We have worked with the International Hospital. We sponsor the Kenya Defense Forces game sponsorship, diabetes. We support the National Police Service athletics, wildlife dialect, and other CSR programs. Regional expansion. We still have plans to go to the region. started with South Sudan, and I think I've highlighted this earlier. We went by our joint venture with the cooperative movement there. It's actually a joint venture with the government. We agreed, the government owns 49% and we own 51%. And I think I've said earlier, before that I think that model is, we find it very sustainable in the context of us being seen as a local bank in the markets that we've gone to. And under the joint venture, the 49% held by the government of South Sudan will be transferred to cooperative societies within a period of 3-4 years. And all I can say is that despite the challenges in South Sudan has contributed profitably, has a profitable operation that contributed positively to the group performance. And so I want to conclude with the key highlights as far as our financials are concerned. I know we're in a digital era. I got these numbers on my mobile phone because I was coming here. Total assets have grown by 6.4% to 354 billion. Loan book has grown by 7%, almost to 227, as at third quarter 2016. Total deposits now at 260 billion. Number of account holders, the magic number is 6.1 million account holders that we are leveraging on in terms of SFE. Shareholder funds have grown by 20%. This is very good for us because we have a shareholder base sufficient to literally double the size of the business we're doing in terms of deposit base. And so in terms of capitalization, the structure that we have had of retention of profits over the years has worked well for us. So capital raising is not on our radar at this moment in time. We have sufficient capital. A very good distribution as far as our loan book is concerned. I know the analysts will be able to dive that more with Anthony in the analyst briefing, but you can see we have an excellent distribution as far as our loan book is concerned. We'll go to the next one. Yes. Same case with our liability portfolio, very well distributed across the various sectors. That's it. 87%, 85% of Kenya shilling portfolio against 15%, and the funding there. We'll go to the next one. Anthony took time to explain that the much work he has done as far as our loan book is concerned. So the number book now is 88%, watch is 7.6%, substandard 2.5%, doubtful 1.5%, and loss of 0.3%. And overall, he talked about an NPL ratio of just around 4%, despite the prevailing environment we in. Again, I'm sure you'll want to possibly interact more with Anthony on those numbers in the analyst briefing. In terms of ratio core capital to total deposits, 18.7 against the statutory requirement of 10.5 by central bank. Core capital to total risk-weighted assets, 15.7 now against 10.5 requirement of central bank. Total capital to total risk-weighted assets at 22.2% against the requirement of 14.5. Liquidity down there of 37%, very good liquidity. Much better than we were a year back. MPO total loans of 4%, as I said earlier, loans to deposit of 87%. This has gone up because we have leveraged more on the funds we have received from the developmental partners. That's why the liquidity ratio is still at 37. Liquidity ratio is better, and loans to deposit is higher because we've leveraged on the funds, like Patrick explained here well, from our developmental partners. Yes, profitability, there it is. Down there, profit before tax. Now you can understand why the numbers are looking the way they look. We've been able to grow our profit before tax by 25%, from 12.2 billion this time last year to 15.2 billion. Just going up there, interest income grew by 24.6%. Interest expense grew by 15.8%. Net interest income grew by 28%. Fees and commissions went up by 4.2%. Forex income, there we suffered a bit. We had a drop on forex income. Total income then went up by 21% from 26 billion to 2.3 billion. We have increased loan provisions in line with the growth of the book. Staff costs, out of cost of living adjustments, has gone up by 16%. Total operating expenses went up by 17.6% to give us the profit before tax of 15.2 billion, 25% growth. Key ratios that we've already gone through. Cost income ratio, it's incredible, now at 47%. Knowing it came from 53 end of 2015, and it was 60% in 2014. Quite a very some job there has gone to that. Cost of funds, more or less at similar level at 4.7%. Staff cost to total income of 20%. I think we alluded to the enhanced staff productivity. Average return on equity of 25.9%. Average return on assets of 4.1%. Non-funded total income of 30.6. Net interest margin is now 10.7. Was the effective corporate rate of 30.8%. Those are our projections to the end of the year. We are looking at the profit before tax growth possibly by up to, we've done 25% that quarter. We expect to exceed 22% at the end of the year. Loans and advances growth, I think Anthony alluded to it, that I think we've already done 7-8 billion just after the quarter has happened. We expect that to go to about 12% by the end of the year. Deposit growth about 8% by the end of the year. Cost to income ratio possibly will retain the same, or 47%. Patrick alluded to that we're targeting possibly to go to 45% in 2017. And then funded to total income of about 36%. And return on average equity of 25%, return on average assets of 4%. And non-performing loans still at the similar level of 4.15%. Cost of funds similar level 4.7%. Net interest margin of about 9.5%. And the cost of risk of 1.2%. We are indeed pleased with the strong balance sheet and P&L growth. Balance sheet grew by 6.4%. Profit and loss grew by 25.2% to 15.2 billion compared to 12.2 as I said earlier. And thank you. I think we took time to explain about the soil in Igbo again. Thank you for your time, because that was the bigger story. The bigger story is not the number. The bigger story is what has given that number. We also it's quite an exciting time to be in the bank. Because a couple of these things we honestly didn't fully appreciate what we're going to get out of them, the initiatives until now. When I say that, for me, the most profound bit of it is when you go to Courthouse branch, it has 120,000 customers. And you find there are no queues, and you find there are very few people in the branch actually sitting looking to this. The customer experience is awesome. We believe we have set ourselves, even as we go on the subsequent phases of this, there can only be better numbers for us to constitute as our investors. Thank you for your time this morning. Thank you. We will have an investors, we'll have the analyst forum after this. Patrick will tell us where, but I'll be happy to give any clarification that we feel was clear and key at this juncture. Yes, behind you.
Morning, my name is Bella from Bloomberg. I wanted to know, given that you're shifting your focus to the digitization or the digital platform, and you're focusing on electronic opportunities, are we going to see any downsizing or right-sizing, if you will, and what are your timelines for that? And are you able to give us the value of transactions on the 85% of the transactions that you have moved out of the banks?
Thank you. That's a good question. And I'll ask, I don't know who, Maurice, you can respond to the second one about the values of the transaction going through. Let me respond to the first one. We are not closing any of our branches, that I can confirm. If anything, actually, we have budgeted to have an additional couple of branches, particularly the mall branches, the upcoming malls. We have a couple of branches we're doing in the malls. we still need our branches because those 6.1 million customers, the first place of call has been the branches. And there's a place in the mind of our people in seeing a physical branch, particularly under the devolved government structure, where people will not want to go to the counties. It will be very difficult to go to a county where you don't have a physical branch to sell to people. You know, our mindset as a people want to see a physical branch for now, as a basic entry point, particularly in the counties. So I can confirm to you, we are not out to close any branch. We have been a couple of select sites, particularly in the malls. Interestingly, between 2014 and today, we have reduced our overall staff numbers by over 400 staff. We retrenched 160 people in 2014. We are not doing any other. Just out of natural attrition and people going, we've been able to reduce our overall staff numbers from about 4,000 to about 3,600. And so we will address, we are not doing retrenchment, we are okay, we are up to. Our numbers are okay, and the natural attrition has taken care of it. Maurice, you want to comment on do you have the number?
Yes.
The evolutions of transactions going through the transactions.
I think in terms of value, what we've witnessed is, of course, as you can imagine, the past. Sorry. Thank you. I think in response to the question, I think what we're sharing is, in terms of value of transactions, I think what we're seeing is about 50% of our transactions going through the digital platform. And again, that is set to increase. I think aspiration is to get that to about 70%. Now, moving into obviously the number of transactions, it's obvious that then the digital platform is doing the bulk of it. I think what we're seeing now is anything between 80 to 85% in terms of the volume, but in terms of value, it's about 50%. And I think this just speaks to the fact that digital is really what we have to and will continue to invest in. Was that
Thank you, Maurice. Thank you very much for your time again. We've taken a bit of time this morning with you. Thank you for your time. I think we needed to share the story again, and thank you for sparing your precious time with us this morning. We'll have the annual session after this. Thank you very much.
So thank you, the presenters. Thank you, all of you, for coming. I think you know that there's that person in the Bible who cooked and invited everybody, but they didn't come, isn't it? Yeah, so we are thanking you that you came to share with us our story. And after this, and for deeper analysis of the numbers, which I'm sure by now you have got them, because they've already been released by the Nairobi Securities Exchange, we will have an analysts forum at the Patterson Room. The Patterson Room is on your right-hand side as you came from down the stairs. You turn left, so this time you turn right. And therefore we can have the analyst forum there. So thank you very much for coming. Again, if you need to contact any of us, I think we have interacted with you a lot in the past. You have our contacts and you have our numbers, and even the emails. Therefore, we are open to any discussion. Thank you very much. You can continue taking the breakfast because it's still there for you. Thank you.
That in Iran, 2 hours, 16